Hello everybody and welcome back to another video. My name is Shadian and I'm gonna be talking about XAUUSD on 5-minute time frame, and today is the 10th of June 2025. Alright, this is the general look you can see here. Last night we talked about this part, which was the end of the day. A market was in a triangle and it finally got tested but couldn't break above. Market came back down. So what happened generally after this happened? The story comes back to the previous week, which where this channel formed. First 2-3 touches. This is a clear channel. The beginning might get tested, even the next day it clearly tested and then came back down. And if you remember, I told you this bottom of this channel last night, I told you is gonna also get tested somehow. Let me then zoom out. Right now you can see that at the end of the previous video I told you we might be in a really wide trading range, and you can see the trading range clearly here. And where is the possible zone? The possible zone of this trading range is these two places. The first one is here and the second one is right here, the bottom of the previous day. So if this is a wide trading range, you only have to buy low and sell high. And sounds like I have made the mistake again and I have bought this position on XAUUSD, and I have put my stop losses right above this top, which is also the top of the previous day. If this is the top of the previous day and you see it's a really strong resistance level, but still I see something here and I want to see whether this is going to work or not. Right now market is in a channel. Channel has has 3 faces, and it is going to test the trend channel line for 3 times. This is the first one, this is the second one, and right now it's toward the third touch. So this is the general idea on the big picture of the market. Let's dive in and talk about candle by candle and every move that I can see I'm gonna be sharing with you. So I'm gonna just zoom in a little bit to show you the exact chart. Here market was in an absolute triangle. You can see it. Okay, it breaks from the top side, but since 90% of breakouts fail, market comes back down to the middle of the triangle, even breaks from the downside, comes back up. Then this is a very good trade. The reason is that market with this shadow even couldn't touch the below of this candle, and this is a sign of strength to me. It tells me that sellers are really strong, and they are sometimes they are really harsh about pushing the market downside. And take a look at this candle that I have already marked in. It breaks from below this low. This is the first leg after the breakout from the top side fails. So if this is the first leg, there has to be a second leg, but this time sellers are more certain about the leg. So, and we know that when series of candles form after each other and each candle closes near its low, that's a spike. That's why we call it a spike. And after a spike, after the first pullback, you see this is the first pullback after, and it comes above this candle in lower time frames. It is more visible, so you can just dive into one lower time frame and see it. I'm not going to do it right now. You can do it by yourself. And after a spike, now we have entered into the next phase, which is the channel. So this is the channel finish in 3 touches. The first touch, the second touch here right now, the beginning of the first candle of the day, and then the third touch, and then it breaks above the trend line. And what happens when the trend line finish? Are we over and the cycle is over? Of course not. We enter into the new phase, which is the trading range, and we know that channel is even a part of our trading range. Okay, so what's the What's the strategy here? You should buy low and sell high. You see, market comes up, touches this top of the last higher lower high, and then market comes back down with this huge movement downside. It's like a magnet, because lots of traders know that this place has to get touched if you are in a trading range. Only professionals, of course. And then market comes back up, tests the middle of the trading range, and then pushes back down again. What happens when market exits from the trading range? We know that we have to measure from the bottom of the trading range to the top, okay, and drag this distance towards the way that trading range has broken, and this is where exactly market gets tested. You could have put your sell stop right here, then put your stop loss right here. So if this is the sell signal after this low, this candle pushes below this low, so your triggers, your stop losses get triggered, and you can put your stop loss above this candle, short the market. 1:1 risk to reward ratio is visible here, and new cycle, has it started? We don't know. This move here could act as an exhaustive gap. This series of candles when they push lower. Okay, why? Because after this trend has pushed for a long time, for maybe I don't know, 8 to 11 hours, this push down could be an exhaustion gap. Sellers could just get out, because this is a very good place to take your profits. They have taken their profits, but market doesn't reverse back up, and instead it goes lower. A new cycle this time begins in the direction of the previous cycle. Another cycle begins, a spike. So this series of candles closing near its low, this time instead of becoming an exhaustion gap, it becomes a spike again. So it makes another pullback with a double bottom. This is the first top, double top, sorry. This is the first top, this is the second top. Let me mark it up. So if this is the first top, this is the second top. Very good place to sell the market, right at the exponential moving average. And if you put just your stop losses, sorry, sell stops below this candle, one tick below this. You could also put your stop loss above the candle. You could go lower, 1, 2, 3 risk to reward ratio, and this is huge number. And something else, after this spike, we know right now we are in a trading range, and in a we are in a channel, and channels finish in 3 touches, and the first touch is the bottom of the beginning of the top or bottom of the spike. In this case, the spike is bearish, so the last bar of the spike in the sell position is the first touch, then the second touch. Now you can draw the line between this and this candle and extend it, and you see clearly market comes back down, touches it. Now it breaks from the top side. What happens when channels break the trend line? Market enters into a trading range, which clearly you can see. So what's the strategy after this happens? You can either sell the highs, sell the minor double tops, sell the pullbacks, sell again the top of the pullbacks with double tops, every pattern you see, and also buy the lows. This is the first low, market comes back down, so it comes back down to test the bottom of the channel and goes up. Market pulls back. You could even buy this bearish candle, put your stop loss like here, because you know we are in a trading range. Market goes up, you can sell, sell, sell until market comes back down again, touches the bottom of the trading range. And also here again, a very strong bearish candle. But what about this bearish candle? This bearish candle is not only just a simple move in the direction of the trading range, lots of traders have sold here, but also this is an exhaustion gap. Let me change the color of this candle. What is an exhaustion gap? We know exhaustion gaps, exhaustion gaps are momentum candles that gets formed in the direction of the cycle. If this is a cycle, a spike channel trading range, then there's such candles forms and a new cycle begins in the opposite direction. Okay, so let me write it here. This is an E gap, or they're saying exhaustion gap right here, and this is the bottom of the trading range. You can buy this close, put your stop loss a little lower if you're a conservative person, because when such candles forms, usually they even are able to push the market a little lower, fail the breakout, and then come back down, come back up into the trading range. And since trading ranges are also magnets, okay, so how does the new market, the new circuit begins? Market breaks from the top of the trading range this time. It creates a minor double bottom and pushes the price even higher. If this is the first bottom, which definitely is in this case, this is the second push. And I always tell my students, when market touches the top or either the bottom of the trading range after the first breakout, you are only allowed to trade in the direction of the breakout only if you see a minor double bottom in the direction of the breakout, and you only have to put your buy stop above the pullback. And in this case, this top above this bullish candle is the top of the pullback. So I'm gonna just put my buy stop. This is the entry above this high. Put my stop loss below this low, this double bottom, and trade it into the direction of the market. The first target, the second market, the third market, the third target, the fourth, and even the fifth you could have taken. You see how beautifully it moves? And something else, another point about this level is that when market breaks out of a trading range, this time I can change the color and put it into when markets break out of a trading range, you have to measure from the top to the bottom of the trading range and drag the line to the place where the market breaks. It breaks in this way, so you have to measure. If you had gone long, this is the first reasonable place that you could have taken your profit targets. Okay, right here. You see, when market touches this level, it makes a huge dip correction. But does it stop here? No. Market again pushes upside towards the top. So this time another double bottom. First bottom pushes up. Second bottom pushes up. Another good trade in the direction. I definitely get this trade. The close of the candle. This is the entry. You could place your sell stop below here. 1 to 2 risk to reward ratio. This is the risk, first reward, the second reward. When market touches it, like what happens, market makes a correction. But does it stop? No. Yet, before moving forward to show you the other candles here, I need to tell you something. I think after this spike has been formed here, you can see the clear new cycle right here. But what's the difference between this cycle and this cycle? The cycle here, the first leg has been formed out of the trading range, out of this trading range. Let me show you the exact place of the trading range. You see, this is the exact place market forms. Okay, this is the first leg out of this tiny trading range. Okay, but this time this spike has been formed in the trading range. Then the channel begins right exactly out of the trading range, and the top of the trading range becomes the beginning of the channel. Very important point. So since the bottom of the channels are, I'm going to mark it, because I somehow believe market sooner or later is going to come back down and possibly touch this bottom of this channel. Okay, so let me get back to the cycle. Cycle begins, series of candle, each one closing near its high. A very tiny pullback right here, but I don't care. After this pullback, I know that we have entered into the trading range, into the channel. Sorry, let me clean the chart a little more. All right, and after the channel, I know channels have to usually touch normally, and for 90% of time, I can for definitely say that they touch the trend channel line. This is the first touch, second touch, and then the third touch. And see what happens after the third touch. It breaks from the downside, and I know right now we are in the trading range. But what's the difference between this trading range, guys? This trading range is a little different from exact horizontal trading ranges like this one. Okay, and what's the difference? The difference between this trading range and these two tiny trading ranges is that they still have momentum. By momentum, I mean they are creating higher highs and lower lows and higher highs. So when this is the case, you can trade in two directions, just like trading ranges. You can either sell the high and buy the low, but still for beginners, buying in the direction of market is a better strategy. So if I were a beginner, I would definitely consider buying the pullbacks, putting my stop losses below each low. You see market can't touch it. Still market is creating higher highs. That's why it tells me something that this move upside could be even really strong. Okay, and right now market is creating a series of really big volume with high momentum, each one closing near its high. But is this a spike you can consider? I doubt it, or only for 25% of time I consider these rallies upside. After this cycle, a new cycle, they hardly ever form. Specifically right now we know that we are in a channel. Okay, and I can consider this as an exhaustion gap. Before market tells me something else and breaking from the top of the channel and start a new channel, I would only consider this as an exhaustion gap. So to me, right now, for this point of time, this is an exhaustion gap. And the reason is that lots of traders who have bought here, when they say this, they see, oh my God, that's a lot of profit in my bank account.
Something
so
else
I have to take
something
profit
different
somewhere.
about the
That's why
cycle,
you see lots
which
of
is
people are
different from
taking
this
profit.
cycle here,
Market
is that
can come
on
back,
higher
and
time
these
frames like
sell
15
rally
time frame,
can cover all
this is
these
a spike.
three
Let me dive
these
into
three
another
candles. If it
one time
covers
frame
it
higher. You
all,
see series of
this is
candles forming
definitely
and each one
exhausting.
closing near
Right
its
now, a lot
high.
of
So this
traders
is
have gone
clearly
long.
a spike.
I won't,
And
because
in
I
this
don't see
spike,
it as
this is
a spike, a new cycle
channel,
before.
which is the next phase
And
of the spike.
something
How
else,
beautiful it is,
and
isn't
something
it?
different
And
about this cycle, which is different from
price
this cycle here, is
breaks
that
from
on
downside,
higher time
right now
frames,
we are
like
going to
15
enter
time
into a
frame,
new trading
this is
range,
an
which would
spike.
be higher,
Let me
which
dive
would be
into another
wider than this
one time
small
frame higher.
trading
You see
ranges, because
series
this
of
is one time
candles
frame higher than
forming,
5 minutes.
and
So
each
let
one
me dive
closing near
into
its high. So this is clearly a
5 minute
spike.
time frame
And
again.
in this spike,
And
this is a
just have
channel, which
another
is the
look.
next phase of
At
SPY.
this point,
How beautiful
guys,
it is,
I
isn't
took
it?
a line
And
trade
if
right
the
exactly here.
price
However,
breaks from
before this
downside,
spike
right now we
forms
are going to
upside,
enter into a
this
new
was the
trading
top
range, which would
of
be
the
higher,
day,
which would
but
be
I
wider than
doubted this
small trading
level would
ranges, because this is
hold
one
it.
time frame higher
And
than
the
5
reason
minutes.
is that
So
I
let me
knew
dive
that this
into the
spike and
5
tight
minute
channel
time
on
frame
higher time
again,
frame
and
like 15 is going to be in a
just
spike,
have
and we are
another
in a
look.
channel.
At
And
this
I
point,
saw
guys, I took a
the
line
channel
trade
has
right
already
exactly
had the
here.
first
However,
touch,
before this spike
and
forms
then the
upside,
second
this was
touch,
the top of the
and
day,
then
but I
its third
doubted this
touch, which
level
is
would
exactly
hold
here.
it. And the reason is that I knew that
This is the third touch.
spike and tight channel on higher time frame,
Okay, first touch,
like 15,
second
is
touch,
going to
third
be in a
touch.
spike, and we are
And
in a
if
channel.
trade,
And
this is
I
the
saw
first fade breakout,
the
it
channel
breaks
has
from the top of the channel,
already
comes
had
back
the
down.
first
If it
touch,
again breaks from the
and
top
then
side
the
and comes back
second
down, I'm
touch,
going to take the
and
opposite side
then
of the trade.
it's
A little risky, but
third
worth taking,
touch,
because
which
market
is exactly
can
here.
come back down and test this trend
This is
line
third
and
touch.
even break it from downside. Who knows? Let's
Okay,
see what
first
happens.
touch,
Still,
second
I
touch,
see a lot
third
of
touch.
momentum here. I'm not
And
going to take
if
this trade. Only
this is the
if I see
first
another
fade
downside
breakout,
with big
it
momentum
breaks from the
and
top
big
of the channel,
volume
comes
in
back
bearish
down.
candle,
If
I would
it
definitely take
again
this trade.
breaks from the top
And
side
let me
and comes
again
back
zoom
down, I'm
it
going to
out,
take
guys.
the opposite side of the
This
trade.
is the beginning of the
A
channel
little
on
risky,
Thursday's
but
previous
worth
week.
taking,
This
because
is
market
Monday, and
can
today
come
is
back down
Tuesday.
and test
So
this
as I told you
trend
previously,
line, and
this
even
top is
break
going
it
to
from
be
downside. Who knows?
the
Let's see
top
what
of the
happens.
trading range.
Still,
Right now,
I see a lot of
market has
momentum here. I'm not
broken to
going
the
to take
top.
this trade. Only if I see another downside
It's
with
better
big
to get
momentum
up from
and
this
big
level.
volume in
Okay,
bearish candle,
to
I will
draw
definitely take this
the
trade.
trading
And
range.
let me
Okay,
again
down,
zoom
up,
it
down,
out,
up,
guys.
right now.
This is the beginning of
And
the
market
channel on
has
Thursday's
broken
previous
to the
week.
top
This is
side, but
Monday,
I'm
and
a
today
little
is
suspicious
Tuesday.
about this
So
level.
as
If
I
it
told you
breaks
previously,
downside, guys,
this
this downside movement is going
the
to be
top
sharp,
of the trading
really
range.
sharp,
Right now,
and I'm
market
going
has
to enter
broken to
into
the
the
top.
opposite direction. But if it holds this
Better
level
to
and
get help
continues
from
going
this
up,
level.
I would do
Okay, to
I
draw
would take
the
the trade in
range.
the
Okay,
direction of the
down,
market.
up, down,
And
up.
only
Right
price
now,
action has to
and
tell me
market
whether I
has
have to take the
broken
trade
to the
or
top
not.
side.
Until
But
then,
I'm a little
I'm going to
suspicious
stay
about this level.
disciplined,
If it breaks
wait patiently,
downside, guys,
watch the
this
market.
downside
I have some
movement is going
stuff
to be
doing
sharp,
at home.
really sharp.
I'm gonna
And
only
I'm
watch
going
the
to
market because
enter
I
into
already
the
have
opposite
taken this
direction.
trade,
But
this beautiful
if
trade
it
here,
holds
so
this
I don't
level
have
and
to
continues going up, I
rush
would do
and jump into the market
I
for
would
every
take
move. Just sit
the trade in
patiently,
the
sit tight,
direction of the
and watch the
market.
market. It
And
will tells you
only
if you
price
read the
action
price
has
action
to tell me
correctly,
whether I
and
have
if
to
you
take the
follow
trade
this
or not.
YouTube channel,
Until
you're going to
then,
learn
I'm going
through
to stay
time how to
disciplined,
trade with price
wait
action,
patiently,
and
watch
you
the
would get
market.
rid of
I
all
have some stuff doing
indicators.
at home.
Thanks for
I'm
watching
gonna
this
only
video
watch
to
the
the
market
end,
because
and
I
have a good
already have
day,
taken
and
this
have a
trade,
good
this beautiful
trades.
trade here.
Goodbye.
So I don't have to rush and jump into the market for every move. Just sit patiently, sit tight, and watch the market. It will tell you if you read the price section correctly, and if you follow this YouTube channel, you're going to learn through time how to trade with price action, and you would get rid of all indicators. Thanks for watching this video to the end, and have a good day and have a good trades. Goodbye.